Hi, I'm Bill Smith. Thanks for coming back to Physio Accountant. I obviously wasn't too dry the first time, although it seemed it. Today, I've got another really important thing to talk to you all about. Those physios building a practice, okay, they've obviously got their premises in the main street, okay, of a busy strip, or they're in a main strip of a suburb somewhere in Australia, and you're building your practice. Suddenly, the landlord wants to sell the premises. You've got an opportunity to buy. You need to buy it. It's very important for your future. You've got the local people coming, you're building your business, and you've got a wonderful opportunity to buy. The other big advantage is a lot of our physios run their business out of a residential premises, but they're running a commercial activity, helping all the people get back on their feet through your wonderful physio activities. So, if you're a sole trader, what you need to be able to do is to buy that property in a property warrant structure. This is the warrant structure here. A bit complicated, isn't it? I'll try to explain it the best that I can. When you buy the property, the title of that property that you buy has to be in a bear trust, not a grizzly bear trust. Bear as in no clothes, bear. B-A-R-E. It gets bought in a bear trust. It's very important. Then the self-managed super fund, and you've got to get your superannuation involved in the purchase of this property. It's got wonderful advantages. The super fund, okay, it takes out the loan with the bank, and then it can go and buy the property. The super fund puts down the deposit, the bear trust holds the title to the property, and then the bank comes up with the balance, which is usually 70 or 60 or 70% of the loan amount. Now, one of the big advantages of this is that because you have this property in the property warrant structure, it's essentially in your superannuation fund. And you know what? No one can get at that property. If you have trouble in business, it's totally asset protected in super. The other big thing is, and this is really important from a tax point of view, is that the physio business is paying rent to the landlord, which essentially is the superannuation fund. So the physio business pays the rent and it gets a 30% tax deduction. And the best thing is that the super fund declares that rent and only pays 15% tax. So you've got a 15% benefit there, okay, that you can take advantage of. And it's a wonderful structure to be running your business out of. Now, if you have more than one physio running the practice, so our bigger practices, we have 3 partners, they have a couple of options too, that they have to involve their superannuation. This is just magical. What you need to do is you either have a partnership of trusts with a bare trustee company holding the title, or a unit trust. And the majority of our clients use a unit trust. But the super fund holds the units in that unit trust. It borrows, once again, some money off the bank, the majority of the money usually, and the super funds of the 3 partners put some money in as well. And the same thing happens. You get the rent received by the property landlord, which is the super funds holding the units in the unit trust, and the tax deduction goes to the business. So once again, you've got a 15% benefit. But here's the best thing. In both of these structures, when you sell this property one day into the future, you, if you are in retirement age, don't pay any tax. 0 tax, none. If you sell this property before you're age 60, it's only a 10% tax rate. So please buy that property, whether you're a sole trader or a partnership, please buy the property and buy it with trusts or property warrants with your self-managed super funds. Thanks for coming along, and please come again next time.